2024 is over and it went by a breeze. However, with Trump being in office, there should be a lot of positive catalysts. Stay tuned to the very end as I'm going to give you my predictions as to what will happen likely in 2025 when it comes to the Bay Area real estate market. If you found this channel helpful and you are looking to make a move at the end of this year or next year when it comes to buying, selling, or investing in real estate, my name is Spencer Su, and I would love to certainly be your real estate resource of choice. 2024 was our biggest year, and we've helped over 60 families this year alone, which is more than 20 times the average agent that does business here in the Bay Area. So thank you for everyone that's tuning in to this video, and I'm hoping you guys are finding this valuable. Be sure to hit that subscribe button, and let's set up a time to chat, to go over our game plan, Zoom details. My calendar details are in the link below. Now, before we can talk about what will likely happen, let's take a little bit of a step back. How has the year been? Here I have pulled up the median sales price as of November from this year versus last year. This year we are at 1.305, and this includes condos, townhomes, single family, and also a lot of counties. So it includes Marin County, includes San Francisco, Alameda County, San Mateo County, Santa Clara County, Contra Costa County. It covers all the main counties all around the Bay. And so when the current prices are at 1.305 as a medium, it is higher than the $1.23 million that it was November of last year. This is a 6% increase. So that's number one to be mindful of at least of the history. How has the year been? Now, other assets have done very well, if not significantly better. Look at the NASDAQ. It has increased 33%, 33.35%. That's tremendous. That's not the big winner. Look at Bitcoin. Bitcoin went up 158% in the last year. And so when people decide about their real estate goals, it isn't just only about housing. It is also about your alternatives. Maybe you don't have any housing right now and you're like, look, I have a lot of money in stocks, or I have a lot of money in one company's stocks. A lot of people that work at specific tech companies have this problem, or they have a lot of money in crypto that has done well. They may take some of that money and divest from that into real estate, especially if they plan to be here for a while. The other alternative is that some people may have multiple houses already, and they may either be wanting to downsize. They don't need as much space. They can cash out on that amount to then be able to distribute to these other sources. Or they may say, look, I don't need these extra homes. I don't want to be a landlord. Let's divest. Let's invest in these other places that they feel could be doing better. So it's never just a zero-sum game. Sometimes real estate goes down ahead of other asset classes. Sometimes it doesn't. Sometimes the stocks go down and then real estate falls. So it's never about, oh, just because you are not earning as much or you are not maximizing your odds of this one bet. Think about it as your overall portfolio. Make an informed decision from that. Now, that being said, different markets will have different impacts of housing. So for example, condos don't appreciate as much as single family does. Or condos in San Francisco have not been doing well for a long time, many, many years. So sometimes it just makes sense. Okay, you've already paid down some of the money of the home. Maybe you want to divest from some of that and roll it into another property, right? So this is a little bit of how it looked before. The other thing I want to showcase is, what about the number of listings? So let's take a look at the number of new homes, number of new listings every month, because this gives people a little bit of a framing. So you take a look at new listings. You look at some of these numbers. In general, this year was typically more than the previous year. Now look at this. November has not done as well, but we still have a week left in November. In this case, at the time of this recording, closer to Thanksgiving, we're probably not going to see a whole lot. But you can see, like October, you had 5,075 homes come on the market. So that's equivalent to a 17% increase. You look at September, 6,121 homes on the market. That's equivalent to 13.3%. So in general, you've seen mostly a range of about 10 to 15% more new listings. So there is more activity. And then when you take a look at the number of sales, let's see how this compares. These are the ones that have already closed and transacted. You can see that the numbers for the most part, most of the months has been a little bit higher, right? Maybe a little bit less in the amount of new listings because not all new listings sell. But you can take a look at this. Look at October, 4,140 minus 3,568. That's equivalent to 16%. Okay, that's pretty similar. You look at September, that was pretty close. So I would say maybe it's an increase of about 8% or so when you blend in all these numbers relative to last year. So there is a little bit more volume. So those are the two main framings people should be having when it comes to how has this year compared to last year, and then what will likely happen for next year. For the most part, people are pretty optimistic in terms of where they think the market will be, and there's a lot of good reasons for that. Typically, just like inflation, there's usually like houses don't stay stagnant. So even base case, housing usually beats inflation. So usually you're increasing at 2-3% just by doing nothing. That's kind of the growth of the US economy. But take a look at this. This report is all these different sources of their predictions of 2025 home price appreciation forecast. And it's across the board. On the very conservative end, it's at 2.3% from Zillow, CoreLogic, these companies. If you look at some of these big players, Goldman Sachs, Wells Fargo, Housing Wire, it ranges from 3.5% to 4.4%. On average, is equivalent to about 2.6%, which is kind of similar to the general economy of the US GDP over an extended period of time. So this is Housing Wire analysts foresee home price appreciation of 3.5%, less than the 5% growth seen in typical years. So they're still expecting things to grow, but they're not expecting things to change drastically. And that's kind of what I figured too. I think the beginning of the year should be pretty competitive though. You already see a lot of action happening right now when it comes to the November timeframe. And keep this in mind, this is on the whole country as an aggregate. The Bay Area is usually a bigger performer than the average. So the average has only been 5%. Bay Area has been about 8-9% increase year over year, especially for single family and townhomes. You'll probably see usually like double these numbers is what we have seen in the past. So either way, there is zero forecast that says it's going to be going down. Yes, even the bears in this case are saying a modest increase because once again, home prices do not stay stagnant. They don't stay at zero. They usually have a mild increase. In this case, it'll still likely be that way. The other important note is a little bit of these projections, right? The pair project 4.2 million in existing home sales in 2025. This is a 5% increase over 2024, which is on pace right now. 4 million transactions on the country, a number that would represent the fewest home sales since the housing burst in 2008. So it's a very interesting time, right? On one end, you can see the amount of new activity and new listings is not going to be that much because most people selling homes will want to buy another home. There's very few people that own homes that don't need to own homes anymore, don't want to own homes anymore. They clearly have a lot of equity in their home and they're usually using that money for something else. So those are the people that they need to have the confidence that they want to sell it and do something else with it. But then at the same time, they got to find another place. So at least it will be a little bit better than what we see this year. But if you already found it difficult this year, you may want to already expand your different options, your different configurations. Now, there is some things happening on the local Bay Area real estate market, and you may have all seen that already. In the Bay Area, there's a lot more return to the office. So you already see that playing out over the last 6 months. Areas that are a little bit further out, like Contra Costa County, Alameda County, in like the Tri-Valley area, like a Dublin, Pleasanton, Livermore, these areas, they're not doing as well versus the places like Santa Clara County, San Mateo County. Why is that? Because the commute is really, really bad, right? If you're coming from Livermore, it's a 2-hour commute to get to work, one way. And so some people are like, look, I'm okay doing this 2 days a week, but what if my company does it 3 days a week? What if they require 5 days a week? Then it's just like unbearable. So you already see that, and you have different companies already down that way. So you have ByteDance and TikTok that's 5 days a week. You have Broadcom that was 5 days a week. You have Amazon kind of enforcing potentially a 5-day work week too. And then I would not be surprised with different companies like Google will continue to be slowly implementing, especially as these companies, the people that are working there are doing well. You can see the stock prices have done excellent, but the job market is tighter. Now, we're expecting that you're going to have a better job market next year. People are pretty hopeful on that for many different reasons. And but at the same time, they're also getting a lot more leaner because they're able to be more profitable with all these different tools of AI and co-pilots and different things to boost productivity. So I don't think it's going to be drastically different, but then their margins are going to be better, right? Like how can these big tech companies not be able to improve their margins significantly through these different applications and tools? So it's an interesting time, but it seems like, as you can see, there's going to be a general increase. Generally, the Bay Area is even stronger than here. It doesn't mean that it's going to be a steady increase throughout the year. Usually the springtime is the highest, so it's going to be a fast ramp. and then it may drop a bit, and then may increase a little bit. That's usually how things play out. But the benefit is the springtime, you have a lot more homes to consider. So take a look at this. The busiest time, new listings, right? It's going to be pretty much March through June. Even July and August. All these times are actually busy. Look at these times. The September this year was very similar to even March and not that far off from April. It's only like 5% off. But in general, March, April, May, June, or actually March, April, May, that's the busiest time. So when you compare this time, this is maybe, it's actually like 50, 60% more. And then you'll see November figures are much less, December figures will be much less, and then kind of ramps back up right away in January. So December will be the lowest time of the year, which is pretty common, November, December, but then January, February already ramps back up. And we see it already, some people getting ahead of it. And I'm telling people this too, like if you want to get ahead of it, it's not a bad time to do things now. Right? Do things while people are a little bit distracted. They're with holidays. Maybe they're just waiting for more things. Maybe they just need to mentally process. Because historically, when you look at prices and you look at like trends, look at this. Look at these November numbers. In the past, if you look at like last year, right? November already starts to decline. So November numbers are already lower than the previous October. But right now, November is still doing pretty well. Right? The November numbers are actually even higher than the October numbers. And the big difference is that the election is over. People already know the winner. They already can see clearly what are the policies that the new president will have in place. And at the same time, people are saying, look, people are pretty optimistic. A lot of these are pro-growth. Inflation is probably going to be around again. Interest rates aren't really going to change a whole lot. Let's just make a move because we already have all these other things controlled. We can buy up to X. Let's make a move now and not have to deal with competition later. So we are going through a lot of these conversations, and that just brings the whole process earlier. It's already seeming to be that way, but it's up to you as to your interpretation of this. But more importantly, it's up to you in terms of your overall portfolio. Once again, just because housing goes up 8%, 10% doesn't mean anything. Like you could have been done better at if you invested this money in the market, in the stock market. May or may not be. You could have done in crypto, all these different things. Right? So it's really up to you to make the decision. But I'm here to be a resource if it comes to real estate related. So anything real estate related, we can go over our game plan, help you guys every step of the way, as we have had, fortunately, a record year this year, and next year we are hoping to do even more. So if you want to go over a game plan, my contact details are below. Let's schedule a time, and then we can figure out what is the best next steps for you. Talk to you soon. Bye now.